And we're live. In case you didn't know, millions of people were robbed by Robinhood. So they have forever earned the name robbing the hood. And this is not an understatement either. Millions of people were literally robbed of billions of dollars. If you were around in 2021 with any of these stocks, AMC, Gamestop, Nokia, BlackBerry, Express, Koss, Naked Brand, Bed Bath Beyond, and up to 50 different securities, you'd understand exactly what we're talking about, folks. Welcome, ladies and gentlemen. I'm going to teach you exactly how you can actually get retribution. The only reason you're not hearing more about this from other people on social media is because they're being forced to sign confidentiality agreements in order to receive buckets of money from Robinhood. This is not legal advice.
And Robinhood this day will pay $65 million to settle with the SEC on two key issues. The first, regulators say Robinhood didn't tell customers the whole story when it came to free trading. From 2015 through 2018, the SEC says Robinhood put misleading statements and had omissions on its website when describing its revenue model, namely payment for order flow or getting paid to send trades to high-frequency firms. Second, failing to get customers the best price on those trades. According to the SEC, Robinhood trades were executed at prices far inferior to other brokers. That's despite Robinhood saying its execution quality matched or beat its competitors. The SEC says in total that cost customers about $34 million. Robinhood is not admitting to or denying the SEC findings, but its chief legal officer, a former SEC commissioner who joined the company in May, says the settlement, quote, relates to historical practices that don't reflect Robinhood today. The startup is on track for an IPO as soon as next year, but sources I'm talking to say this SEC settlement and those charges from the state of Massachusetts just yesterday are not likely to slow down Robinhood's momentum. The company has added 3 million customer accounts and raised more than $1 billion this year alone. Tyler, back to you.
You know, Kate, quick question for those who are maybe a little around for years and years for order flow. It's been around for years and years and years, and practically, I don't know whether I'd say everyone does it, but it is a widespread industry practice. What is it and what's wrong with it, or what can go wrong with it?
So like you said, it's perfectly legal now that trades are free and commissions have gone to zero at all the major brokerage firms. This is how these brokerage firms are making money. They pay, the high-frequency trading firms pay these brokerage firms to get customer trades. So they flow to certain places like Citadel, for example, and it is very much the industry standard. The SEC complaint for Robinhood is way more about disclosure and transparency. They say, yes, that is legal. You're allowed to do that, but you need to be very clear with your customers. And they are. They've changed the way that they do things and disclosures on the website. But when this company was starting out in 2015 and was a high-flying tech company, they missed some of those disclosures. And like Dan Gallagher, who's their chief legal officer, said, that was a set time frame. They're now apparently caught up with the rest of the industry on disclosures, at least.
What they're saying here is that Robinhood literally costs retail investors tens of millions of dollars more through their commission-free trades than if they were to just pay a few pennies or a few dollars up front, because there is no such thing as a free lunch. None. So Robinhood had to pay $65 million to the Securities and Exchange Commission. The SEC took a cut, the United States Treasury took a cut, and you guys got a big fat zero. All of us got absolutely $0. Now, Robinhood can continue to do those shady practices of selling your order to market makers like Citadel and Virtue via payment for order flow because it's disclosed in the fine print that nobody reads. As such, you're still getting screwed. You're paying more through the poor bid-ask spreads, terrible buys, terrible sells, than if you would just pay a few pennies up front, because then at least you would know how much you paid and you'd be getting the most optimal spread. And it would oftentimes be occurring on a lit market. Currently, all these trades, the majority of these trades, are occurring on dark pools, which is greatly obfuscating the actual share price of these stocks on the stock market. Let's jump in here. Iorio law is saying if you held AMC, GameStop, Koss, My dog does not like Robinhood, as you can see. As soon as I started talking about them, she gets pissed. If you held GameStop, AMC, Koss, or Express on January 28th, 2021 and lost big due to Robinhood's sudden trading restrictions, you may be eligible for recovery. Now, the reason that we don't hear more about these lawsuits is because they're not going to court. Robinhood is settling with people out of court in order to try to mitigate the amount of people that are learning about this, to prevent more people from actually suing them and taking them to arbitration. I'm going to scoot this over here a little bit so you guys can see it better on the screen. Iorio Law PLLC Investor Recovery Center, Robinhood Trading Restrictions Lawsuit, GME and AMC Investor Representation. Were you among the countless retail investors caught off guard by Robinhood's sudden trading restrictions in January 2021? If you held positions in, quote, meme stocks like GME, AMC, BlackBerry, BBBY, Nokia, Koss, or Express, and suffered significant losses when Robinhood removed the buy button, you may have legal options to recover your investments. Now keep in mind, there were over 50 different securities. This does not only extend to GameStop and AMC. Mostly people hear about the top 8 or the top 13, but beyond that, Robinhood made approximately 50 different symbols, position close only or limited, and this prevented people from buying the stock. Therefore, they manipulated the markets. They prevented people from buying them. However, they continued to let short hedge funds and family offices buy them to close their short positions, thus tanking the stock prices. So if your intuition, they say, I asked GPT, I'm like, yeah, there's a lot more than 8, there's a lot more than 13, give me all of them. And sure enough, it gave me over 50. Not just the names in the spotlight. You're correct, they were impacted. The actual restriction that was far wider during that volatile period. And I did that on ChatGPT so that all of you could see that I'm not just making this up. So you could see that there's a large amount of different securities here that are eligible for this. Honey, I need you to turn that down, please. Excuse me. My little one is got the TV cranking, and we have to adjust that. So, and let's switch over to this microphone. This microphone's much better quality over here anyway. There we go. As a leading securities arbitration attorney says, here, August M. Iorio of Iorio Law has been at the forefront of holding Robinhood accountable. In 2022, Mr. Iorio secured the nation's first FINRA arbitration award against Robinhood for these controversial restrictions, paving the way for other investors to seek justice. Today, Iorio Law represents dozens of retail investors nationwide who collectively lost tens of millions of dollars due to Robinhood's actions. If Robinhood's position close only restrictions disrupted your trading strategy and caused financial harm, contact us for a free confidential consultation to explore recovery options through securities arbitration. Now, it's obvious that these are not going to court, because if they were, we would see court filings everywhere. But one can surmise that because that's the case, and we're not seeing all of these court filings, yet there are many retail investors suing Robinhood, then it appears as if Iorio Law and these retail investors are having to sign confidentiality agreements and thus receiving a significant amount of money from Robinhood. And I'm not an attorney, and this is not legal advice, but they are attorneys. I have not been paid. I have not been sponsored. I have not been asked to do this in any way. But here on this channel, our job is to not only expose the financial manipulation, the market manipulation, the way that your 401ks and equities and stocks and bonds are being used against you, but also to show you how you can actually fight back. This is one of the number one ways that retail investors can fight back and hold Robinhood liable on a contingency fee basis. That means that you don't owe them anything unless they can actually get you money. Then they would take their percentage, just like any standard contingency fee basis law firm. What that amount is, I don't know. Again, I have not been paid or sponsored or asked to do this in any way, but because we are constantly trying to help retail in every way, this is one of the best ways that I've seen so far. You also have other great options out there, like looking into non-payment for order flow, upcoming brokerage lit exchange, who will not be selling your order to the highest bidder to be manipulated in dark pools, which is what Robinhood does, as we just heard, is very clear, and why they had to pay $65 million, and why you lost over $32 million more than if you had just paid a commission. And that even includes the amount that would have been paid for the commission. So as you can see, there are literally tens of millions of dollars years ago, at this point, probably hundreds of millions of dollars in losses by retail investors through poor bid-ask spreads. Let's see. Iorio Law founder August M. Iorio achieved a groundbreaking victory for a retail investor against Robinhood. The client, a 27-year-old truck driver who suffered substantial losses when Robinhood blocked purchases of Koss and Express shares. A FINRA arbitrator found Robinhood liable for the investor's losses. So if this sounds like you with GME, AMC, Koss, Express, or any of the other 50 stocks that were made PCO, including the silver ETF, SLV, right? If you're a silver stacker, if you held SLV at the time and you lost money, you could potentially also have a claim. Mr. Iorio's client was awarded compensatory damages and interest. So not only did he get money, he also received it with interest, with Robinhood ordered to pay all forum fees. So it doesn't look like the client had to pay out of pocket anything. They didn't have to pay the legal fees either, because the forum fees for the arbitration were paid by Robinhood, is what this is telling us. And here's the historic win FINRA case number. Proves that investors can successfully fight back and recover their losses. The whole PDF is available here. I will link it to you guys down below in the description. I'm going to copy the link and I will pop it in here for all of you guys as well. See, there it is. Drop this in there for you guys. Here's a link to the tweet. Here's a link to, you can also Google it, right? Iorio Law, IORIO Law, and Robinhood, and I'm sure it will be one of the first things to pop up, but it is in the chat now. You guys can click it there. I'll put it down in the pinned comments. I'll put it down in the description below. Come on, girls, do me a favor. Please stop screaming. They're a little excited. Why did Robinhood impose trading restrictions? They publicly blamed market volatility, but the evidence shows a different story, folks. On January 28th, they shocked users by designating several highly volatile stocks, including GameStop, AMC, blah, all the ones I mentioned, and up to 50 more throughout the week and month. PCO, position close only, without prior notice. This meant customers could only sell existing positions, not buy more, effectively cutting off access to these markets. So their investigation reveals that Robinhood's restrictions stem from internal failures rather than mere market volatility. The firm was undercapitalized and unprepared for the surge in trading volume, leading to a liquidity crisis. Folks, and we know that this is true because if it wasn't, Robinhood would have already sent them a cease and desist. They would have sued them, and they wouldn't be able to show this on their website. They wouldn't be able to show this and state this publicly. So I have no problem gladly stating this, because if we were to go to discovery, if we were to go to court, then we can start to really bring up some more information on Robinhood. And I'm not signing a confidentiality agreement for a few $100,000 or a few $1 million. Let's put it that way, folks. Not me personally. I would much rather be here talking about this and watch people collect tens of millions, possibly hundreds of millions, maybe even billions of dollars from the people that robbed them. Robinhood lacked the scalability and capital to handle its business model amid heightened volatility. Robinhood failed to meet collateral deposit requirements from the NSCC, prompting restrictions to protect the firm's own interest ahead of its planned IPO. Post-restriction, Robinhood issued conflicting and misleading public statements to downplay the crisis, further eroding investor trust. And today, as a matter of fact, I saw Vlad Tenev out there basically shilling his tokenized securities which are not sponsored in any way by the companies which they claim to back. They're nothing more than toxic derivatives. Absolute garbage. Dog shit wrapped in cat shit, if you've ever seen the movie The Big Short. These actions not only manipulated stock prices, causing immediate declines in GME, AMC, and other meme stocks, but also violated core duties of fair dealing and best execution under FINRA rules. Investors traded in an unfair market, resulting in widespread damages to equity shares and options contracts. For instance, GME's pre-market price plummeted after the PCO announcement, wiping out value for call options holders. Similar patterns affected all of these stocks, and as the restrictions created artificial downward pressure. The 2022 report from the U.S. House Financial Services Committee confirmed that Robinhood's restrictions were a direct result of its own internal failures. And we have that pulled up right here. But the key findings were they were not prepared. They got margin called. They were not ready to meet the NSCC capital requirement, forcing trade limits that barred customers from market participation. They had a liquidity crisis. The trading restrictions were implemented for Robinhood's own benefit because the firm lacked the capital to meet its clearinghouse deposit requirements with the NSCC. They didn't do it to protect you or your money. They did it to protect themselves. Inadequate and flawed risk management. The firm ignored FINRA's advice to adopt conservative stress testing and relied on incomplete models that overlooked excess capital premium charges. They prioritized growth over stability. Their internal communications showed hesitation in modeling volatility as early as January 24th, 4 days before actually going PCO, while focusing on expansion despite operational strains. They lied to the public. They sought to conceal the true reasons for the restrictions and made false and misleading public statements about the company's financial stability. And unlike other brokers, Robinhood's limits were more expensive and prolonged, exacerbating market impacts. So, these findings contradict Robinhood's market volatility narrative and affirm that the restrictions were a symptom of deeper failures in capitalization, liquidity planning, and compliance. Instead, they strengthen claims of market manipulation under federal and state laws. So you can actually go and reach out to Iorio Law here for a free consultation. If they take your case after an evaluation, there's our phone number at the top, 646-330-4624. They will not charge you a penny out of pocket, and you will not have to pay unless you win, because it is on a contingency fee basis. So I want everyone out there to reach out to their attorney and see if this would be a good idea. So, why should they choose Iorio Law for my Robinhood claim? Our firm secured the first FINRA arbitration award for a retail investor against Robinhood for these trading restrictions. We have navigated this complex legal battle and won. We currently represent dozens of investors with tens of millions of dollars in damages. Why haven't you heard about this? Because it's not going to court. It's going to arbitration. Robinhood is fucking losing and paying out tens of millions of dollars in damages. If you lost me on X, my apologies. Not much I can do about that. Follow on YouTube. Subscribe on YouTube. That's why we do the channels. Do them here on YouTube as well. X is pretty glitchy. Twitter is pretty glitchy in many ways in that aspect. There are no out-of-pocket legal fees. We handle these cases on contingency fee basis, which means we only get paid if we successfully recover money. What if I sold my shares for a loss? Can I still have a case? Yes. Many of our clients suffered damages because the restrictions artificially drove down share prices, forcing them to sell at a loss in a market that was manipulated. So whether you sold or not, you still have a case. We encourage any former Robinhood customers who held these stocks before January 28th, 2021 to contact us. He said, you're not just another number. You're an investor whose rights were violated by a firm that prioritized its own stability over its fiduciary duty to you. They have a proven record of helping investors recover nearly $100 million in over 700 cases. But again, you haven't heard about it because they're not going to court. It's all being settled, and Robinhood is paying out the ass in arbitration. You don't have to do it yourself. The attorneys do it for you. That's why they are reaching out with these firms. Again, I have not been contacted. I have not been asked. I have not been paid in any way or compensated in any way whatsoever to make this video, other than the fact that I want to see retail investors like you get what you're owed.
Tanev, I'm going to come to you first. I just want to get to what happened on that day in January. So let's take a step back here. You get a call in the middle of the night, according to what I've heard you in interviews say. And based off that conversation with your compliance team, you decided to halt the buying of GameStop stock. People were furious. We'll get into the regulations and the settlement parts of that today. We will get to that. But this is what I think needs to be answered about your decision. Why did Robinhood restrict the buying but not the selling of GameStop? And why did folks get locked out on the buy side only?
Ranking Member McHenry, I appreciate the
Here come the lies.
opportunity to address that. The reason that Robinhood, first of all, let me say Robinhood is always committed to providing access. It's in our name. It's in everything that we do. The decision to restrict GameStop and other securities was driven purely by deposit and collateral requirements imposed by our clearinghouses. So buying securities increases our collateral requirements. Selling does not. Moreover, preventing customers from selling is a very difficult and painful experience where customers are unable to access their money. So we don't want to impose that type of experience on our customers unless we have no other choice. And even though I recognize customers were very upset and disappointed that we had to do this, I imagine it would have been significantly worse if we prevented customers from selling.
Okay, so let me ask this question. Is payment for order flow legal?
Yes, payment for order flow is legal and regulated and
is
a
this
common
disclosed?
industry.
And is this disclosed to those users of your app?
Yes, payment for order flow is disclosed in multiple places. And moreover, payment for order flow enables...
Remember, guys, he was already fined. They were already fined, Robinhood, $65 million for lying to you about payment for order flow. It was not previously disclosed, but after they got sued by the Securities Exchange Commission for $65 million for costing you tens of millions of dollars more than if you would have just paid a few pennies or a few bucks up front, then they started to disclose it in the fine print without really telling anybody, right? They just put in the fine print that nobody reads when you sign up for Robinhood.
Commission-free trading, and that's why it's...
There's no such thing as commission-free trading, folks. You don't see how much you pay, but you are paying way more through the spread, through the bid-ask spread. For example, instead of paying, say, 5 cents for a small, tiny trade through a commission brokerage, with Robinhood, you might be paying 10 cents, 20 cents, 30 cents, 40 cents, and you have no idea how much. No idea. I would much rather know up front that I made a big trade and I paid $2 or $4 or $5 versus making a big trade and knowing that I got 100 shares fewer and I lost out on $80 worth of shares or $100 worth of shares because the bid-ask spread was so bad in comparison. On top of that, the market makers, the wholesalers like Citadel and Virtue are buying your order from Robinhood through payment for order flow. They're paying Robinhood. You are not Robinhood's customer. Citadel and Virtue are Robinhood's customer. They are paying them to buy your orders so that they can front run your trades and process them through dark pools, fail to deliver on your shares, issue synthetic shares out of thin air that don't really exist. It's like selling a car 1,000 times. You sell the title to 1,000 people, but you've only got one car at the end of the day. And then when it's time to deliver it, well, you just FTD. You fail to deliver and hope you can get them a title in the future. It's really that simple. And as such, you have diluted the market and diluted the value of that car exponentially.
It's become the industry standard model as other brokerages have replicated our model and started offering commission-free trading to their customers as well.
Okay. So So to that, to this greater point of what happened that day and the model that you're using.
Tammy brings up a great point. You said that my broker charges me $10 per trade plus sends it to the OTC. First of all, that's a lot to charge for a single trade, in my opinion. Second of all, you need to look into Lit Exchange. Because Lit Exchange, as you can see in the link on the side, is not going to be routing your orders to the OTC.
Let's be crystal clear. That decision you made to restrict the buying but not the selling of GameStop was it based on pressure from anyone on the witness panel here today?
Not at all. Zero pressure from anyone. It was a collateral depository requirement decision made by our Robinhood Securities president.
All right. So let me get into this other question. Let me get into this question. You want to democratize finance. You want to open up Wall Street to retail investors. You say that Robinhood's mission is to democratize finance for all. So let's talk about that. So yes or no, can a Robinhood customer invest in Robinhood, the company?
Robinhood's currently a private company, so that's not possible, no.
Remember, Robinhood did not give you the opportunity to invest in the company until it IPOs. Lit Exchange is the first and only upcoming stock and crypto brokerage in world history to ever allow you to own equity shares in the company before launch, before IPO. That means potentially, you could potentially make significant gains between now and the time of IPO, when the company does IPO, at which point you could sell your shares on the market for that price.
And so you mean to tell me that the people that use your platform, that make you a successful company, and I would say directly contribute to your company's exponential growth and success, they don't get the same access to equity shares as a Robinhood employee or your institutional investors. Is that correct?
Currently, that is correct, yes.
All right, Ms. Schultz, let me pivot to you. Why is that? Why is it that everyday investors on the Robinhood app, people that I would argue contributed to its success, can't invest in Robinhood itself?
The SEC limits a lot of investment in private companies to those folks that are known as accredited investors. And to become an accredited investor, you have to have meet a wealth test of earning at least $200,000 a year, or having a net worth of over $1 million. The vast majority of people in this country don't meet that standard and are unable.
Correct. And just to follow up, Lit Exchange did something that Robinhood could have done, but decided not to do. Via the Jobs Act of 2012, under Regulation CF, Regulation Crowdfunding, we have filed with the Securities Exchange Commission an exemption that allows you, the retail investor, to actually invest in the company. Okay, you have the opportunity for the first time in the world to become a founding member. We have to update our splash page here. You got to keep in mind, this is our splash page, not our actual website. This is for people to come and learn about the company. The Founders Program has been extended, so it is no longer ends August 8th. It has been extended for another 6 months. We have applied for NASDAQ ticker reservation as we plan to pursue an IPO, and you will receive equity and many unique benefits by investing in Lit Exchange. You can see that here so far. This is on a FINRA-regulated funding portal. Over 500 retail investors have already invested over $1.1 million in the company. This is pre-launch. This is pre-IPO to give you an opportunity to potentially make significant amounts of money off the valuation of Lit Exchange over time. So keep that in mind. You can also view the SEC filings directly on the SEC at your website there. The amendments to the Reg C and the Reg CA that extended the raise for 6 more months to give you the chance to invest. So keep that in mind. Also hear from a lot of our other investors, including our featured investor, Mr. Nicholas Butorak. Huge shout out to you, my friend. So far has invested tens of thousands of dollars. I believe since the time that this was originally posted. I don't know if I can actually legally say how much. Never mind. I cannot say. I probably shouldn't say. I probably could, but I shouldn't say, because that's nobody's business. But this is public, and he knows that it's public. He let us post this. As well as what all these other investors posted.
To invest in most private companies.
Okay, so let me just clear this. Mr. Tinev, I don't blame you for the restriction you put on your customers not being able to invest in equity. I'd like to have more opportunity to ask Mr. Gill his thoughts on this, but let me just say this. I don't fault you for the inequitable regulatory structure that DC has created, but I think we need to clear this up. Final thing, Madam Chair, I have for the record, I'd like to submit a letter from the DTCC, which is the clearing company, that was not on the panel today, and your staff has this letter already.
Order.
All right.
What a fucking shit show. What a complete fucking shit show this was. I implore you, go ahead and reach out to them if you want. 646-330-4624.
In this video, we walk through the exact anti-routine.
Their email, if you need it, info@iorio.law. Easy enough. iorio.law is their website, and you can get there. And also, if you cannot see that below. Preserved Billy asks, will it be possible to transfer IRAs to Lit Exchange once it's live, my friend? We do expect to have support for 401ks and IRAs, if not immediately upon launch, but soon after. So, my friends, this video has gone on long enough. I will leave you with that. I wish you peace and wealth. We did just set up a brand new computer over here. We did just set up a brand new whole, basically setup here that I'm still getting completely enhanced and optimized as it should be. So it has been a bit of a tough one today, as you can see here. Hey, baby, come here. Come say hi. Come over here. It has been what, you wanted to sneak over and say hello? Come here. You can say hi to everybody.
Like,
Just say hello.
Looking at?
What are you looking at?
What did I look
That's you and me. See that? See that? That's all the fellow retail investors over here that are invested in AMC, Gamestop, Express, Koss, many other stocks, and Lit Exchange. Isn't that cool? You want to say goodbye to everybody? Say goodbye. All right, go on. Go on.
Bye.
Yeah, this is the mini bus. Thank you, baby. Come here. Come on. All right, folks. Have a great rest of your day. I wish you peace and wealth. I plan to be back tomorrow with another one because it is time. We've taken a hiatus as we've been very busy with a lot of things going on, specifically with Lit Exchange, working with our securities attorneys, working with our patent attorneys, trademarks, the whole 9 yards. And it's time that we start to do these videos again full time to really try to help people and educate people and help them recover from these kinds of losses, because there's a lot that can be done out there. Remember, folks, it is not over, not by a long shot. I am still holding a significant 6 figures worth of these stocks, and I'm not fucking leaving. Not by a long shot. Not even close. Cheers, folks. I have no idea what's going to happen when I click ending because I have not seen this screen. It might be some weird shit, but here it is. Username. Oh, that's awesome. Cheers, folks. Have a great rest of your day. Thank you, Duder, Nat, Giles, Dr. Gummy, Young, Doug, Billy, Wolfie, Tammy, Maynard, everybody, Queen Bee, mods, retail investors, Lit Exchange founding members. I appreciate all of you. Thank you for your support. Thank you for your partnership. Looking forward to this. This is our time. Paul, you can rewatch this, my friend, and you will gain a good amount of knowledge, and I hope it helps you, my man. I hope you recover a ton of money. Cheers, Phoenix.
Someone said,
Cheers, C.
Someone
EB.
said bye.